But my personal view is that I'm a big fan, obviously, of gold, and maybe silver, but I'm mainly an advocate, personally, of gold. I think you should have, or I think it's advisable that people have a meaningful allocation to gold. Now, why is that? It's not because it's cheap or it's jewelry or it's a commodity. The key point is, well, whenever paper money systems are in trouble and there is a meaningful risk of an inflationary outcome, as there is right now, I think gold automatically gets remonetized. And that's what we're seeing right now. The gold price has gone up for 10 years because the system is maneuvering itself into this sort of cul-de-sac. And so if inflationary outcome is risky, is a risk or has a certain probability, gold and silver come back. That's the eternal form of monies. Gold is a monetary asset. Around the world, people use it as a monetary asset. In all cultures, it's not something that is dependent on government diktat or fiat or government decree. Around the world, gold is seen as a store of value. It has so for thousands of years. So I think it has that sort of advantage. The gold price is not cheap. Gold price is already a bit higher, and I think there's already a sizable premium in the gold price because of the scenario we're in. That's not surprising. The market is not stupid. The market is already trading gold with a premium over where it would be if it would just compensate you for inflation. But I think as the system further unravels, I think this premium could even go higher. But even if we don't go for if we don't have an inflationary outcome, if you have a voluntary end to printing money and there is the willingness to allow the system to correct, even in that scenario, I think gold would do quite well for the simple reason that, if in a deflationary environment, obviously banks will be hugely challenged. Many other financial assets will be hugely challenged. So you can think of gold, it's almost like it's a monetary asset without being part of the fiat money system. It's almost like internal capital flight. You're pulling money out of the established financial infrastructure. Please remember that the reason to hold money or a monetary asset is because you don't want to hold a consumption good. You don't want to buy a car because you want to keep money. You want to keep the flexibility of spending it at a future point. But you're not buying bonds or equities either. Because you're committing to an investment good, like a company or your productive capital. In this current environment of huge uncertainty, and also an environment where many productive assets or equities or bonds are hugely inflated after 40 years of paper money creation, and yields are very low, you may want to have a larger part of your wealth in money. Money allows you to sit on the sidelines, to have flexibility, to look what happens, how things pan out, and then invest, or then spend. The only problem is, in our monetary system, that obviously means you go back to paper money. But paper money right now is sort of the last tool they have to keep the system going, and paper money will be printed like confetti, or obviously in the case of a bank, if you have a bank deposit, the bank deposit is your asset, but it's the bank's liability. A bank deposit is a credit, and you give a loan to a bank. So that comes with problems or concerns and issues. So in a way, you can think of gold as almost like a monetary asset that's outside the established fiat money system. Yes, it's not cheap. It can be volatile. Yes, you can lose money on it, depending on which scenario comes. But I think it's an essential self-defense asset in this environment, simply to keep some of your wealth relatively secure. Personally, I'm not a big fan of fixed income and bond markets, and I say this, I spent 19 years in financial markets as a bond trader, mainly as a bond portfolio manager. I personally don't hold bonds right now because I think the bond market is a massive powder keg. And again, because you're holding debt, and there's too much debt in the world, and the market would liquidate a lot of that debt, so you would lose. If the market was allowed to liquidate it, you would lose as a bond investor. If the market is not allowed to liquidate it, then they have to print more money, and that would ultimately, at some stage, lead to higher inflation. So I think either way, sooner or later, you're going to lose. I know the last 12 months bonds have done great, have done very well, so my timing is completely off. And who knows, if they keep this quantitative easing game going, maybe they can cause bonds to stay up here or maybe even rally further. I can't exclude that, so the timing is hugely difficult. But it's very clear to me, once they sell bonds, once the public disengages from the bond market, is going to be a huge problem for the system. So I'm fairly negative on bonds. I think the other final thing I will say is, in general, I think as this crisis goes on, I think please be aware that I think already the recession has created what I would call an anti-wealth sentiment in the public. Yeah, so I do think that will drive politics further. I already mentioned capital controls. I think it's very likely at some stage we're going to do this. I mean, some of these think tanks float interesting ideas. In Germany, there was recently the idea that the government should force people with a certain amount of savings to buy a certain amount of government bonds. So basically compulsory investing in the government bond market. This was just an idea being floated by a fairly influential think tank in Germany, just to fund the euro crisis. These kind of things will come back. I mean, I'm very sure that people who have some wealth and people who have maybe some financial independence because of the wealth they have will almost be like a persecuted minority going forward. Many of these states are in dire straits. They need money desperately. And I think you should consider that very clearly. So I think it depends how flexible some people are. But I mean, please look, if you look at some of the people who have a lot of money, one of their concerns now is simply, where do you hold the money? In which jurisdiction? Where do you hold your assets? In which country? And also, which country would you want to live in yourself? If this goes on and gets worse, what are the places that are more secure? And maybe even which passport you want to hold. Because as more regulation and legislation comes on the way and the crisis intensifies, I think we already see this the signs are very clear. We see internationally what I would call like a war on offshore. There's been various attempts to make banking in places like Switzerland or Luxembourg very, very difficult. This is openly, of course, to avoid tax evasion or tax cheating. But even for people who are honest with their taxes and declare everything, this makes banking outside your home country increasingly difficult. So there are all these trends that are already sort of clearly visible, and I think all of these will gain momentum. So I think the idea that often wealth holders have when they go to their wealth advisors or private bankers, I think often the message they get like, well, this is great, you got some money, wonderful, enjoy your life. We're going to look after your assets for you, and we buy some bonds, we buy some equity. And it's all wonderful. I think this is it's nice if it was this way, but I think this is increasingly naive. I do think if you do have wealth, you will be targeted, and I think that the main risk to any private wealth going forward is probably more political. With such a highly politicized economy now and this process of nationalization of money and credit, I do think you will run into ever more regulation, what you can do with your money and where you can go. And if you don't act soon, many doors could be shut fairly quickly.